Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
So Emily, New York and Minnesota, two states that I want to talk about and two states that have something in common, and it is certainly not hot dish, but instead it's, I think, challenging markets for many operators in this space for very, very different reasons. And I think that was illustrated in a big way by the news last week with Verano breaking off the deal with Goodness Growth. So can you give us a little background about, what exactly happened there?
Yeah, exactly. This news broke on Friday morning. And so just to catch everyone up, in January of 2022, Verano and Goodness Growth had announced that they were entering into a merger agreement. It was an all-stock transaction that would have actually represented about 10% of Verano's equity now. And it would have given them exposure through Goodness Growth to New York State and Minnesota. And it's really crazy to think about how much has changed in 2022, that those assets at that time were considered to be prize states because there were very limited licenses in Minnesota. So it was GTI, Vireo, and Goodness Growth that had these full vertical licenses. And then in New York, of course, we know everybody was vying to have a license in New York because all eyes were on this market. In addition to this breakup of this transaction, Verano has filed for a $14.9 million broken deal, basically, and $3 million in transaction expenses reimbursed. And, it's interesting because as we know and we talked about on the pod, Ascend Wellness broke the transaction in New York with MedMen. They cited that the assets had deteriorated during the course of the transaction, which was not, which was a breach of the agreement. These guys had just said that there was a breach of the agreement. And so they cited that as the breaking of it. But one can't help but think that this is driven more by the recent uncertainty that has developed around the New York State and the Minnesota markets. And it's really interesting how this has gained momentum in terms of the uncertainty we all have around what these markets will look like for this model of the MSOs, or the vertically integrated operators who retail cannabis through a regulatory regime that involves testing and potency and certain product categories and certain labeling, all of the things that we've come to know in each of these markets that have been required by the regulators for these markets to open.
Yeah, and the interesting thing here, I mean, for me from the outside, is that Verano terminated the deal, yet they're still filing for reimbursement on the transaction. I mean, I'm sure there's a lot of color to, what exactly went on, but that's an interesting spot. And I saw that the Goodness Growth share price just got pummeled after the news came out. So it's like a double whammy, right? They're losing the acquirer, they're getting penalized potentially, upwards of 15 million and 3 million. Was that the kind of numbers there that you mentioned? So yeah, I mean, what do you think? Is that common in deals? Like you call the deal off and you go and say, I mean, I guess if it's a material breach, did they say what it was, with Ascend and MedMen? Obviously it was like the facilities and the state of the facilities, and it wasn't, what they had agreed to purchase, because it just had gone into some sort of disarray or whatever it was. Is that what this was? Did they give any details on that?
They didn't give a ton of details, and it may be because we're coming up on the Q3 earnings calls, and so there may be some materiality to that. But I did see some things around, it sounded like it may have been based on the quality of the assets and not being kept up. I mean, anyone who's operating in Minnesota or in New York these days, these assets are not cash flow positive. I don't even know if they're actually technically very EBITDA positive on 2022 or going into 2023, what the projections. I saw something like the deal was based on a 2023 projected EBITDA for Goodness Growth. But I think where we are in this market is very interesting because we saw the spike the day of the Biden news, and obviously we're all waiting to see banking reform, and interest rates have also gone up in the macro environment. And so it's just a really difficult time for the operators, and especially for Verano, who has to do some work on their balance sheet. But there is this sense of, we're looking for these companies to move not just to maintain being EBITDA positive, but to be looking to a path to free cash flow in 2023, 2024. And these assets certainly would not have helped Verano to achieve that. Further to that, they have to be very careful about how they're allocating their resources. And so when you think about the cost of capital in our industry, first of all, TerraSend just refinanced their debt, and I think they also expanded their facility. They did that at 12.75%. That's an extraordinary rate in this market with no warrants attached to it and 36 months interest only. But all of that that's pretty extraordinary in this market. Everything else I'm seeing is north of 15%. And so when you think about the profiles of these businesses, the revenues they're generating, this is almost the most expensive cost of capital that we've faced yet for these larger operators. And so I think Verano, just even though it was all stock, I think they just had to be wise about their cash flow, because they would have had to invest in CapEx in these facilities. And so redirecting that to their existing operations, or maybe they're looking at more creative transactions. But given the question marks around New York and Minnesota, I think that that's probably a large driver about how they were feeling about the quality of the asset they were procuring in each market.
Yeah, that's a great point. In a statement, Goodness Growth, is countering that, right? Saying that ultimately they deny all of Verano's allegations, complied with its obligations under the arrangement agreement in all material respects at all times. Verano has no factual or legal basis to justify or support its purported grounds for termination of the arrangement agreement. They're saying that, they didn't, nothing's changed and they didn't have the right to do this. And obviously this will all be settled in court. But kind of interesting. I mean, I guess that's all they have to say, right? They wouldn't say otherwise. I don't remember Medman's response. You might remember, did they say the same thing? Like, hey, you can't do this. We're going after you. Nothing's changed. Or did they acknowledge that things have changed? Do you remember what happened there?
I'm trying to remember what was acknowledged outside of things that I, had a different
Probably
look
not
at.
much. Yeah. I mean,
I don't think they
why would you
did.
acknowledge, much
Yeah.
to it, just to be protected, I would imagine. But it
Yeah.
is, of course they're going to say, which I mean, kind of to your point about, what is the state of the states? And like, maybe there were things that Verano wasn't super thrilled with, but if it was such a good thing, you continue to push the deal through, right? But things have changed, and you're right. The cost of capital is a big one. I think that the market dynamics are a big one. Like just to kind of refresh, I love talking about Minnesota because I think it's so wacky and just so interesting, what's happening over there. But it's not a great dynamic for the MSOs. And we've talked about this on a previous podcast where the MSOs are actually going after Minnesota, saying, look, we should be able to sell beverages and edibles just like a brewery can, just like a restaurant can. We test it and we control it and all of that. So we're in a better spot to do it. But they're kind of on their back foot there, and the dynamics have changed. So that's kind of what's going on in Minnesota. We'll see if that happens. But even if it does happen, I'm sure it's going to open up and drive more people through the door. But if you can get it at a brewery, if you can get it at a restaurant, you're going to go out of your way to get that same beverage at a dispensary. Maybe not. That came into the calculus for Verano for sure. Like, okay, if there's some sort of breach of the agreement, do we still want Minnesota? Maybe not as much right now until maybe these things get settled. I think there's a lot of unknowns in that state. And then New York, right? And you were just in New York, and definitely want to kind of hear what's going on in New York. But from the outside, I think the initial read is that, I mean, when we knew the regulation was going to be no vertical integration and really encouraging a broad array of operators coming through. I mean, that's not an MSO market. It's not the type of state that they really excel in. And I think it's going to be challenging. And there's still so much uncertainty. I mean, there's still, was it last week, the banking situation? Was it like 2 local banks applied, which is crazy? Only 2 banks in the entire state of New York applied to support the equity licenses with the state. And so I don't know, it's slow going, right? And we've been talking about New York a long time, but maybe if Verano, again, their calculus is like, okay, look, let's step back and watch this thing unfold and really understand what we're getting into as part of the reason why they bailed out. I'm sure, that's not what they're going to say. I'm sure that's not what's going to be in any statements, but obviously that has to go in the decision. M&A is challenging. And anytime, these things come up, you have to determine, do we keep going forward or do we stop here? And it looks like they decided to stop. So yeah, I think it is a big signal on, these 2 markets in particular, very different markets, but still, I think, challenging markets for different reasons.
Yeah, I mean, M&A is incredibly difficult, and it's kind of like building a home or doing a renovation. It takes longer and usually is a little pricier than everyone at the table would like it to be. And then it's made more complex by we've got these other big M&A things on the horizon, like the Cresco Columbia Care thing, which is more complex even because you have to divest of assets so you don't run afoul of the state guidelines of ownership restrictions. And so it is just a really interesting path. And we've seen this many, many times before with M&A. Goodness growth, I think it just, they got on the wrong side of the trade of this. And so it's difficult. Like maybe the assets, like you said, if the markets had been shaping up to be as attractive as Verano had hoped, you kind of get through these things. But if things are moving against you and there's challenges within the actual core assets, then it becomes difficult to get done. I was a little bit surprised that it went, instead of being like it, maybe if we were in a different capital environment, we would have seen a retrading, which we've seen time and time again in California, for example. But in this instance, just to cut it off, I think is really showing that Verano is like, we've got to focus on balance sheet. We've got to focus on a path to free cash flow, because that's what's getting credit in the market. And in a market that's so thinly traded and challenged, they've got to focus. And so to your point on Minnesota, I mean, you're a vertically integrated operator. You've got to pay all of these fees and expenses and try to run things through this process to a small and limited medical market at this point. And you're competing against breweries that already have infrastructure. All they're doing is plugging in a new product line, a hemp beverage or whatever it might be. I know Colin from our team has background in Minnesota, went to school there, and he was there recently visiting some friends. He did not make it to Psycho Susie's, but just due to the fact that it was so busy, but he did get to some breweries, and he said that it is quite prevalent there. But he was talking with some of the owners of the facilities, and they were like, it's not that popular yet. And they were kind of hypothesizing that it was because people don't know enough about it. Like, obviously we know about it because this is all we do, but the citizens of Minnesota don't necessarily know this. But then again, I also do know folks who live there, and they're ordering gummies online, like from some of the companies you and I have discussed on the podcast. So, and they have no concerns about it. It's like, we can get the Delta 8, Delta 9 gummies from these companies. It's no problem. And especially now that Minnesota has kind of made this statement around how it's going to handle these products. And then just shifting over to New York, I'm really glad you mentioned that issue around the banking, because, we've heard the regulators say we're opening January 2023. And I'm sorry, it is mid-October. There is not a snowball's chance in hell that market is opening in January. And if it does, I have no clue what it will look like. But what I do know is I just spent 4 days there with our team. We had our investor day at the New York Stock Exchange. That was really cool. And we also spent a day touring New Jersey. So I had the opportunity to be in New York and also to experience we got to see the TerraSen cultivation facility, which was really cool, and then shop around at different stores, including Ascend, TerraSen. We tried to get to GTI's Rise, but we had logistical issues with the rain. But nonetheless, it was a great tour, and we got to, buy some product and see what it's looking like in New Jersey. And then our team on Friday we took a run around New York because, we are big believers in getting into the market and seeing what's going on. So we went into a bunch of these different smoke/vape shops and asked a lot of questions. And to be fair to these guys, like, they stood there and answered all of our questions to the best of their ability. So what was crazy is I saw products like Stizzy, Jeter, which is a big California brand, right there prevalently displayed. And then when I was like, oh, well, do you sell just like bud? Like, a couple of guys, they brought out these like packages that look like knockoff of cookies packaging, but it's much flimsier and you can also see through it, which is very different from, for example, in New Jersey, you can't have see-through packaging because they don't want you to see the product. And then they had joints, they had keef rolled joints. We bought a 2 milligram, quote unquote, keef coated cannabis joint for I think like $20 or $25. One guy pulled out a turkey bag of buds, and we were like smelling everything. They had it open. The thing, like, here's a perfect example of kind of a gross, unregulated market thing. Like, the guy was just sticking his hands, and look, no shame on the guy, like, really nice people, but like, we live in tested, regulated markets. So, like, do you want people's hands, especially in like a post-COVID or new COVID world, hands all over your products? It's just a really weird time. So, we brought it back to the place where we were staying and did like a side-by-side comparison of the New Jersey product. I don't know, guys, like, that joint, that like 2 milligram joint, I don't think it even had weed in it. There was like no effect from it and super sketchy. And then the same thing with the like bud. It was just like really weird looking, dark. Some of the guys think maybe it was, sprayed with something. It just looked gross. So it made me like the takeaway I had it. So we were holding it up to, we had bought Cookies Medellin strain at Apothecarium in Maplewood, it was really nice. And I just felt like we stacked it up against it, and it made me sad for New York, because here's why. And then I went and saw my best friend the next day, and she's like, "Oh, my friends are all buying weed in these stores, blah, 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 blah." It makes me sad because people think that's what they're getting, but I have no idea what that is, if it's hemp or what, but it's not weed the way we've come to know it, or cannabis as we've come to know it. So I feel sad for the New York market, because I think it's just very confused at this point.
Yeah, no, I think you're right, and it's hard for a general consumer to know. They know it's legal in New York, and you walk into a store and you think this is New York cannabis now, and I can get these great California brands out here, and this world will not last. But the longer it goes on, I think the more challenging it's going to be to tamp it down. I mean, California still has problems with that. These kind of gray or illicit market shops. It's hard to squash that stuff, and it's not good for the industry in general. So I don't blame an MSO to say, look, I want to wait and see how this market's going to shake out, because as it stands, you're right, it's like not going to happen in January. I mean, that's just a couple months away, which is crazy to say, but a couple months will come up quickly. And so what is it going to look like, as it's getting pretty mature as far as illicit at this point. So need to not only figure out, what the new license structure looks like and what these stores look like and what banking looks like, but also how are they going to stop these things? What kind of enforcement are they going to apply? In every market, we've seen this happen. Toronto was like this for a long time, where these illicit kind of guys that were, in the in-between times really kind of put down pretty strong roots, and it can be hard to pull those up. So it's just how much is New York willing to invest to do that for the benefit of the broader market. Yeah, I'm not surprised that MSOs are taking a wait and see.
Well, and it's like what we've seen, to your point, in LA, where you have a legal shop right around the corner from a fully illicit shop. They're not paying taxes. They're not paying fees. And by the way, they may be even accepting credit cards. And, we were in these stores and we used credit cards. It's all barriers to transitioning. And so then you just have a really heavy lift about what's the value proposition of the legal market. And if we are moving into more of a recessionary time, who knows what that means anymore, but people are strapped and they're looking for a fix, and they can use the credit card and kind of float that cannabis purchase. It could make a difference of where they're deciding to buy. So I don't blame operators who've seen this play out in other markets where the illicit market has not been well tamed. It's just looking tricky. I think you and I have been very intrigued by, just a sidebar on like Minnesota, like, because I think you and I both believe that cannabis doesn't need to live off on its own. So integrating it into normal experiences. And I do like that people who are going to a brewery have an option that's not alcohol if they'd like it. So I'm curious, and maybe this is just something we should all ponder, is like, how can we make this work so that the folks that are working within these strict environments can have businesses, and then there are other ways that people can access it. It's just, maybe it's more of a question than anything, but something I'm pondering.
Yeah, well, the states seem to need all the help they can get, so maybe we should think about it a bit and see what we can do around that. But you asked, like, what is the thing that the regulated market has over the illicit market? If illicit market can take credit cards, that's a pretty big advantage for sure, and maybe that can change with some banking regulation, maybe, or some federal change, obviously. But I think, at least they're not getting the sprayed on, hemp derived Delta 8 flour that apparently gives you a sore throat. so that's, something that the consumer can avoid by going in the legal channels. So let's hope people recognize that, and this thing all shakes out, sooner than later.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.